Opendoor has had a roller coaster of a month, and last week was no exception. After two powerful green sessions in the middle of the week, the stock cooled off a little on Friday and in after-hours trading, but the bigger picture going into Monday morning is far more interesting than a couple of red candles. This isn't just about price action, it's about the foundations of a new narrative forming under the surface. In this video, we're going to look ahead to Monday's session with a bullish but rational eye, tying together the key developments from leadership, insider confidence, new product launches, and a noticeable shift in how the media is talking about Opendoor. Let's begin with the product rollout. Last week, Kaz Nejatian, Opendoor's relatively new CEO, launched a buyer-side product in parts of Texas with a simple but powerful tagline: "We don't just want you to own a house, we want you to love a home." Alongside that tagline came two headline benefits that are practically unheard of in the residential real estate space. The first is a 7-day home test drive where Opendoor buyers can live in and evaluate the home before finalizing the purchase. The second is a 100-day home warranty, adding a layer of trust and security that traditional brokers rarely offer. This isn't a small tweak, it's a signal of a company that is repositioning itself from a high-volume iBuyer into a customer-centric home platform. It tells investors that Opendoor is serious about differentiation at a time when competition and higher rates have put pressure on the traditional model. Going into Monday, traders will be watching closely for any data points from this rollout. Even anecdotal evidence of strong uptake could become a spark for sentiment to turn. Layered on top of that is insider confidence. Just last week, Eric Wu, Opendoor's co-founder and now a returning board member, filed a Form 4 showing he purchased 300,752 shares at $6.65. This is his second insider purchase since coming back to the board. When founders who know the business inside and out reach into their own pockets at scale, it's a signal the market can't ignore. People don't buy hundreds of thousands of shares on a whim, especially not after a bruising couple of years. Wu is clearly telling the market he believes there is upside ahead. For the Opendoor community that has weathered the storm, the so-called OpenArmy, this feels like validation. You can have all the analysts' notes in the world, but nothing beats skin in the game from the people building the business. Leadership optics have also become part of the story. Keith Rabois, the PayPal mafia veteran who has returned as chairman, posted photos last week with both Donald Trump and Benjamin Netanyahu. These photos created debate online. Some were angry at the optics, while others saw them as evidence of Rabois' extraordinary reach. Regardless of where people fall politically, it's undeniable that few chairmen of mid-cap companies are in rooms with global leaders and former presidents. For investors, that reach translates into credibility, potential connections, and future partnerships. In the world of real estate and tech, where regulation and capital both matter, having a chairman with deep networks in politics and Silicon Valley is an asset, not a liability. Going into Monday, this backdrop adds another layer to the bullish case. Leadership clout plus insider conviction plus a new product launch equals a company playing offense again. Another underappreciated shift is in how mainstream financial media is framing Opendoor. For most of the past 2 years, outlets like Motley Fool, Barron's, and Bloomberg tended to describe Opendoor as a risky house flipping play, a kind of Zillow gone wrong. Last week, for the first time in a while, Motley Fool published an article calling Opendoor a growth stock to watch. That may sound subtle, but narrative matters. When a company crosses over from being seen as a speculative real estate operator to being seen as a growth platform innovating in a trillion-dollar market, it opens the door to a much larger pool of investors. Funds and individuals who screen for growth themes rather than speculative deep value may start to pay attention. This narrative shift dovetails perfectly with the new buyer product and the insider buy. It's the kind of alignment that often precedes a stock's re-rating. Of course, price action still matters. After last week's rally, the stock cooled off on Friday and in after hours, but that may simply be normal profit-taking after two strong sessions. The flat to slightly down aftermarket can also be interpreted as a pause rather than a reversal. Stocks rarely move in a straight line. What matters for Monday is whether the combination of positive news, insider confidence, and narrative shift can overcome short-term selling pressure. If it can, we could be looking at the start of a trend reversal rather than just a dead cat bounce. The broader macro context also provides tailwinds. The U.S. housing market, while still challenged by high mortgage rates, showed surprising strength in the latest new home sales data. Median home prices remain elevated and demand in key Sun Belt markets like Texas and Arizona is strong. These are precisely the markets where Opendoor is focused. If the company can leverage its new buyer perks to gain share in a resilient region, margins could improve faster than expected. Investors going into Monday's session should keep an eye on any fresh housing data or mortgage rate moves, as these can amplify whatever company-specific catalysts are in play. Another aspect to watch is the social media energy around Opendoor. Eric Jackson, who has been one of the loudest bulls on the stock, posted from Europe last week about retail traders forming a rising dynasty, middle-class investors looking for breakout plays rather than settling for the soft strategies of ETFs and index funds. He explicitly named Opendoor alongside Betar, Cipher, and Iron as his current high-conviction picks. That kind of rhetoric resonates with the OpenArmy, reinforcing the idea that this isn't just a trade but a chance at transformative upside. Whether you agree or not, sentiment like that can move volumes when aligned with insider buys and product news. All of these strands, the new buyer experience in Texas, Eric Wu's insider purchase, Keith Rabois high-profile connections, shifting media narratives and retail enthusiasm, create a setup going into Monday morning where the risk-reward may be starting to tilt back to the upside. The stock is still far below its all-time highs, which means that even a partial recovery in sentiment could deliver substantial percentage gains. That's not a prediction, but it is the kind of asymmetry long-term investors look for. As you prepare for Monday's session, think less about whether the stock is up or down a few cents in the pre-market and more about whether the story is improving. Are fundamentals aligning with leadership signals? Are new products resonating with customers? Is insider buying confirming that management believes in the strategy? Are influential voices helping shift the narrative from survival to growth? On all of those fronts, Opendoor is in a stronger position today than it was even a month ago. It's also worth noting that stocks often turn before the headlines catch up. By the time the perfect quarter arrives, the market has usually already repriced. What we're seeing now, modest gains, insider buys, leadership flexing its networks, and innovative product launches, is exactly the kind of backdrop where stock can start to climb the wall of worry. The OpenArmy has endured a tough stretch, but patience during the grind often sets the stage for upside when the pieces finally come together. So as the new week begins, the takeaway for Opendoor investors is to stay focused on the bigger picture. Friday's small dip doesn't erase the progress made last week. The launch of the buyer product in Texas is more than a marketing tweak. It's the first move in what could be a broader repositioning of the company. Eric Wu's purchase is more than a footnote. It's a vote of confidence from the founder. Keith Rabois photos are more than social media noise. They're evidence of a chairman with reach. And Motley Fool's new tone is more than a headline. It's a narrative shift that can attract fresh capital. All of these elements together form a bullish backdrop heading into Monday morning. Whether the stock jumps immediately or not, the underlying story is improving. For long-term investors, that's what matters. For traders, it creates the possibility of catching a trend reversal early. And for the OpenArmy, it's a moment to remember why they've stuck with the story through the tough days. As we head into the session, watch for early volume patterns. Does the stock attract buyers on small dips? Do we see continuation of the Thursday through Friday gains once the bell rings? Does social media chatter pick up around the new buyer product? These are the telltale signs of sentiment shifting. And finally, keep an eye on any additional communications from Kaz or the company. If they share a public link to the new product as promised, that transparency could bring more eyeballs to Opendoor's innovation and reinforce the message that this isn't just a house-flipping platform anymore. It's becoming a home-buying ecosystem built around customer trust, insider conviction, and leadership clout. That's the frame for Monday's pre-market. Not just another recap of last week's candles, but a look at why the story may be turning. If you've been following Opendoor for a while, you know it's been a long road. But as we start the new week, there are real reasons to be cautiously optimistic. Leadership is playing offense, insiders are buying, products are evolving, and the narrative is shifting. Sometimes that's exactly the recipe for a stock to surprise on the upside.